Hey everybody, it is Wednesday, the 11th of October, 2023, and we had another update for the most part in the market. The S&P came right down to the week-to-date anchored volume-weighted average price and found buyers there. It shouldn't be a surprise to us that the market's not pulling back deeper because we have a rising 5-day moving average. However, we still have to be aware that we have a declining 20-day moving average, declining 50-day moving average. We're up against the anchor from this prior low. And by the way, if you're listening to me on YouTube, watching this on YouTube, there is a free webinar at 8 p.m. Eastern tonight. The link to sign up for that is in the description below. If you want to attend live, click that link. If you want to see the recording, it will be emailed only. There will be no other way to watch it unless you register for it. So please use that registration link in the description below. This will be based around the anchored VWAP, that is the webinar. So it will be recorded, and as I said, it will be sent out to people who register for it. There's no exceptions to that. So let's take a look now at the NASDAQ, which is still it's still rallying above that rising 5-day moving average. We didn't get as deep a pullback in here. In other words, we didn't test the week-to-date anchor, and we still have a rising 5-day moving average. So despite the declining 50-day moving average, we're continuing to move higher. The declining 50-day moving average isn't a timing signal. It's something to tell us, be alert that it has a higher probability of failure while the 50-day moving average is declining. But then again, we also have to say, well, what if we rally up to this level tomorrow? This level is where the 50-day moving average closed. So at that point, we're going to have a flat to rising 50-day moving average in the next few days. I would still prefer that maybe we rally up a little bit more, even up towards this trend line in the NASDAQ, and then make a higher low, and then we could see the much advertised fourth quarter rally begin. A lot of people are pointing to the seasonality that we typically are strong in this time of year, and that's true. So we'll just take it evidence-based on what price action is telling us. For the Russell 2000, we continue to bounce from the bottom end of the range that this market's been in, and this is where, again, if you're a bottom fisher, then you've got a good trade going. But keep in mind, with a declining 20-day moving average, declining 50-day moving average, declining 200-day moving average, it's not likely to make it far. So the way to handle that is to say we're above a rising 5-day moving average on the 30-minute time frame, and we have a pattern here of higher highs and higher lows. So we look at that and say, what's the most recent relevant higher low? Well, that would be right here. So if I was long this Russell 2000, which I'm not, I would have my stop underneath this higher low right now. The semiconductors continue to push forward. They also have that declining 50-day moving average. We made it through the anchor from the all-time high, and that is, again, the all-time high. We eclipsed it back in earlier this summer, and now we're closing right at the high end of the range here today. This is the higher low. This is our new higher low in there. So, again, buyers, you've got to give them the benefit of the doubt in the intermediate term while we have a rising 5-day moving average. This gives us reason for caution, meaning that the more extended it gets, you've got to be careful about adding to your positions and assume that it's likely a correction either through time, going sideways will occur, or price, or a combination of the two. But it's still healthy action in the semiconductors. You can't argue that. The biotechs continue to be the dogs. They're still stuck at this prior low. So we had a push up through that level and then back down below it. And it continues to be important in this 72.5-ish area, 72.80 maybe. We gapped up here and then failed. And again, we've got a rising 5-day moving average, but this trend is just so powerful, and we're still stuck below that low. If we can recover in here, the way for it to happen would be maybe something like this. Create a higher low so that if you do get involved, so for instance, I had mentioned if you were going to get involved here, you had to have your stop at that level. So now we want to see this thing rebuild, and possibly if you're a counter-trend rally trade, counter-trend trader, then the primary trend, of course, being lower with a declining 20, 50, 200-day moving average, etc., then you want to wait for your shorter-term time frame. I don't like to buy there. That's me. It doesn't mean you can't make money buying these as they rally up, but the odds are against you because of the larger-term trend. The financial stocks are right up against that year-to-date anchored VWAP, the 20-day moving average, any anchored VWAP from that high right there. So this is a place where, again, you ask yourself, where has it come from? 32.25 to 33.50. It's only $1.25, but percentage-wise, you've got, what is that, about 4% or so. And we do have the pattern of higher highs and higher lows. It's just getting extended. So where has it come from? It's up 4% in the last few days. Where does it have the potential to go before it's likely to encounter a source of supply, which might become resistance? Well, we have this prior support right here that became resistance at that point. We have the declining 20-day moving average, the declining anchored VWAP off of that peak, and the declining 200-day moving average. So when we look at it and say, where does it come from and where does it have the potential to encounter supply, which is right here, then you ask yourself, is the risk worth the reward for a new purchase here? To me, the answer is no. It's your money. Do what you feel is right for you. I would say your stop goes under here. This is the most recent relevant high or low. Energy names pulled back a little bit here today, right down to the 5-day moving average. We'll see how these things set up. If they, oil itself was down a little more than $2 today. So we'll let those settle in and see if a trade develops.